our goal was to get to 7,200 in the next 10 years when my husband retires so that we can
Oh
replace
my
his income.
gosh.
So we're
So you
already
hit it.
past that. So we're already past it, which is insane, right?
The military taught us discipline, it taught us leadership, but it never taught us how to really build wealth and income. This is the Active Duty Passive Income Podcast, and I'm your host, Mark Eon Sitch, a United States Marine turned full-time real estate investor and educator. I'm bringing you the most successful military, veteran, and military spouse real estate investors, entrepreneurs, and industry experts to break down exactly how they did it, so you can too.
Hey, ADPI, we're back yet again, yet another awesome episode. And this time, actually, this is going to be interesting because we have a team member on the podcast. Someone that we met, maybe like a year and a half ago, and it was just like this, one of those wonderful moments where things just happen for a reason. And she was an awesome community member, and now she's a team member. And I'd love to introduce everybody to Betty Boyce. Thank you for coming on. And for now, by the way, I'm gonna basically drop the news here because I know it's not going to come out for a while before it becomes official. But Betty Boyce is also going to be, after only a year and a half with us, our VP of Ops. So, you're a wealth of knowledge. You've done so. You mastered how to think about the VA loan and what opportunities it can bring. And you've coached hundreds of our members into maximizing their VA loan options, investment opportunities, and getting more rentals, and just coaching people through that. So welcome, Betty. How are you?
Thank you. No, I am great. I'm super pumped. This is something that I have wanted to do for a while. First of all, I am really excited to be VP of Ops. Stepping into this role and joining the ADPI team was nothing that I had planned, but
That
same with
wasn't in
real
your bingo
estate.
card?
It wasn't on my bingo card. Real estate wasn't on my bingo card more than just a couple years ago. And so I feel like all of it has really just snowballed into just like a real passion of mine. So I definitely have a history in educating service members. When I was in the National Guard, I was also our benefits manager for all of our federal employees, and I really grew that program as
Okay.
well. So I really feel like it was just like a natural like when I started on the team here or got into real estate and then started on the team here, it was just like I know what to do. And talking with our service members in this role and being a coach or a mentor on in our ADPI campus, what I really realized was just all the misconceptions about the VA loan, or people who have been
Mm,
told not good information by maybe real estate agents or lenders who, to no fault of their own, right? Because the rules
yeah.
change all the time, that the guidelines don't really make a really clear line in the sand. And so I've really been taking so many notes over the last year on kind of like these big pain points for people and just the misconceptions. So I'm excited to get on here today so we can talk about some of that.
Something that just came to mind when you mentioned that, like, they are well intended. Like, a lot of military
Mhm.
members are trying to help other military members, or just, some agent out in town next to, a base, and they think they know everything about the VA loan. They truly are well intentioned. But the thing is, I think sometimes people, uh, there's a different approach. There's the strategic approach. If you really
Mhm.
like take the bird's eye view and you try to figure out how all the, I've told many people on the podcast, like, I've had to fire my CPA in the past because they were going to lose me $50,000. Right? It's not because they were doing their thing. They're like in the weeds, in that forest. I need to see bigger picture. So I'm thinking strategically. So I think what you're really good at and what ADPI does a really good job of is helping our members think strategically. And how does the VA loan, it's the best tool to become a millionaire, in my opinion, if you use it right. And I
I'm
know
pretty
you,
close.
yeah, yeah,
So
yeah.
yeah, yeah, I definitely I agree with that. And again, to no fault of their own, but I think what our society in general, we have a lot of just like there's a scarcity mindset, and there's a horror story
Right.
that somebody told them forever ago that does not apply to the program any longer. Things have been
Right.
updated, and so that's really what it's about, is not listening to your grandpa or your uncle or aunt from, the 1970s or 80s, uh, which is sometimes when we have people come into the community, that's the only thing they know about the VA loan. And so they just very quickly realize, I should have done this so much sooner. And that's,
Yeah.
yeah,
Yeah,
yeah.
I mean, for me, and like I love my roommate from the Naval Academy and his family. They're awesome, but like they were a little bit, worried about us, and they talked me out of getting my first house in Pensacola,
Hmm.
Florida, which is, a low key like a six-figure loss that I could have made a killing on it, but I didn't. And
Yeah.
I think it again, same thing. And so we were just talking before the show, and I want you to like foot stomp this. What is the one thing you want people to walk away with when they hear this episode?
Yeah, the one thing I want people to understand is, you don't need to believe all of the bad information that's out there. And what you really should do is get educated on what the current guidelines are for the VA loan and how you can strategically use them for what your current financial goals are, not somebody else's.
And exactly, and for the purpose of this episode, so as we dive deeper, guys, like everything that you think you knew about the VA loan, just throw it out the window,
Yep.
and let's start from scratch. Okay. So what is, you mentioned a couple of them, but what is like the biggest myth that you are just so pumped to like burst somebody's bubble if they're believing this myth, that you're like, let me enlighten you, young Padawan.
Yeah, that's exactly why I'm on here today, because I get a lot of comments and a lot of special reactions when I'm one-on-one with people in our community, and that is, you can buy more than one house, primary residence, in the same town on the same street using your VA loan. You are not restricted. There is no law. There is nothing that
Goodness.
prevents you. So, for all of our National Guardsmen out there, like, this is really a tool. But also for people who are active duty, you bought a house, but, either sight unseen or you didn't know the area well, right? And then you PCS'd there and you got there, right? And you're like, yeah, I don't actually like this street. There's a neighbor's dog who just barks absolutely insanely. And or there's more street noise than you thought. You
Or
are
there's a
not
five
locked
foot
into that.
raccoon.
Or there's a fight, like,
Sorry.
there's so many, yeah, exactly. But there's so many reasons. And people think that once they get that VA loan or they're in that residence, that they are now locked into that for an unknown amount of
Right.
time, or until they
Well,
PCS
speak
again. And that's not true.
right. And speaking of lock-in, um, well, actually, gosh, there's so many things I want to touch on, but like one of the, I think, side myths that spawns from this is this whole 1 year lock-in period, right?
Hmm.
I
Right.
think I think people think that the 1 year rule is something that's like you're going to go to jail if you don't stay in this house for 1 year, versus the reality of it is just that's how we measure intention. Like, do you
Correct.
intend to occupy? Yes, I intend to hopefully live there a year, but
Yeah.
if the military sends me elsewhere, like you're not going to get in trouble, right?
But that's even what I'm saying right there, is because right there, what you said is they think they have to have the military tell them that they have to move. But that's not the
Ah,
case,
let's dig into
right?
that. Okay.
Yeah. So so take me, for example. I'm in the National Guard. I'm not going to PCS. My husband, well, I'm not in the National Guard
Right.
any longer. I've been out. So I'm a veteran, but my husband is still in. And the National Guard is not going to tell him we are going to PCS across the state. That's not going to happen. But we can
Right.
still buy another primary residence in the same city if the current home no longer fits our needs. So we moved into the home. I'm actually sitting in one of our rental homes right now. We can talk about that later. But we move into the home and we fully occupy the space. But if at any time during that 1 year period that home is no longer, you think of it like a qualifying life event, if you will, for insurance, which a lot of people are like, their mind
Okay.
can
Okay.
understand that better. But the qualifying life event isn't I have to PCS, or the government told me I have to move. The quality of life, or the situations you can find yourself in is, yeah, I work from home right now, which I do for ADPI, and I don't have an office in this house. So now I want to shop for a house with an office because I took a remote position, or we're going to grow our family, or parents need to move in with us. Or again, the neighbor's dog is really aggressive towards my child. Like, there's a lot of things that on
Fascinating. Okay.
all you have to do is, when essentially, when you are, nobody's going to come back on your current loan, right? You occupied the home, you have a valid reason, a reasonable reason. I'm not saying, and this is one thing I make very clear in our community, do not commit fraud. Do not use
Right.
this as something to say, oh, well, I occupied it and now I'm just going to go buy another house. They will catch on to something like that. But if you have a reasonable reason to move and buy another primary residence to use more of your VA loan entitlement, you can do so. So the home that I'm sitting in now, which is 4 doors down from our other home and is actually a little bit smaller, it's got one less bedroom. Uh, and the square footage is about 400 square feet smaller than our other home. I
Okay.
just had to write a letter of explanation to the underwriter when we were getting this home that stated this was the actual lot that I wanted when we moved to this community, but the builder wasn't ready to build on it because I get all of this window light. So, all of this beautiful light coming to me today is because there's no homes on the south side of this lot. It's a vacant lot and will remain that way. So, just that explanation. It's got a little bit more garden space, and I love to garden. And so that was the only explanation I needed.
Wow. Okay. So it doesn't like qualified life event, I think is a good analogy, but it doesn't
Yeah.
have to be anything very drastic, is what you're saying.
No, no. And
Yeah.
and
I,
and
I
go ahead.
no, 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 no. Go ahead.
Yeah,
Keep going.
what I was going to say is this will differ based on your lender. So it's not the VA guidelines, it's the lender that you're talking to and using and what their overlay to the VA guidelines are. So if you are finding yourself with one that is saying, no, we're just not going to approve that loan, that's okay. You don't want that lender. Go to a lender who is military affiliated or knowledgeable and also an investor because they get it.
Oh my gosh. Okay. So, first of all, I just have to like interrupt everything. Guys, if you are looking for a lender or a
Mhm.
real estate agent and you want somebody who's, been there, done that, and hasn't the investment mindset
Mhm.
and will go to bat for you with the VA, like they will call the VA, right? And they
Right.
will plead your case in case it isn't just cut and dry. Like, reach out to us. Okay,
Yep.
activedutypassiveincome.com. In the menu, there should be like something that says top notch professionals or, talk to an agent lender. Hit us up, go to our Facebook page, email us at support at Active Duty Passive Income. It's about to be PCS season. Guys,
Mhm.
if you need help on this and you want somebody that actually, does the things the way ADPI teaches so that you actually grow your wealth massively, reach out to us. Now, back to the show. Okay, so um I honestly, you kind of just blew my mind right there because
Mhm.
yes, like I thought it had to be like, oh, something dramatic. I thought it'd be like we
Mhm.
had another baby, right? But it doesn't necessarily have to be at that level, is what you're saying. It's kind
Yep.
of like in the military, you say, hey, everything's waiverable, right? Like, and it
Right.
truly is. Like
Yes.
every
Yes.
single thing in the,
Yes.
you know what I mean? You can get a waiver. Like, I want to move out because the sunlight's better. I'm kidding, but like, it might work out. You're not committing,
It
like,
worked.
and that's the thing. Like, you're not committing fraud
You're not.
if you're honest. If you're like, and it might work out, right?
Yep. Yeah. And
So
that was the true intent when we bought this house. We have kind of gone back and forth as to which one is our primary residence based on which one's renting, but it's also created the leverage we need to move less than half a mile away and build our dream house. So
are these the same two houses that I remember you made a video and you were like, yeah, and we just rolled our mattresses down the street?
on my
So
son's
you're
skateboard.
literally on the same street.
Literally on the same street. Yeah. We literally, our neighbors, we kept it very hush hush because these were very, um, very popular set of homes because they're new to this area. We have a home up front and then a detached garage with an apartment ADU, full apartment above the garages. And there's only 8 in our community. And that building plan is very new to Salem, Oregon, where we are. ADUs in
Mm,
general are not widespread across the country. They are definitely popping into areas when urban growth is an issue or density is an issue. Then they start adding ADUs. So, anyway, we knew how popular these were and, but let me actually take a step back because I think what is really important for this audience is to go
yeah.
back a little bit to before Betty and Brandon, my husband, were real estate investors because we have only been real estate investors for 4 years now. And I want to go back to um, a little bit of our history, if that's okay.
Please do. No, no,
Yeah,
please. You know what? And I think we just like, I was so excited about the
I know.
topic. We just dove right in. But like, I
Mhm.
think, typically I do ask, like, who was Betty before you are who you are today? Like, give us a little background, all that kind of like,
Yeah,
do the
I
whole
just
nine. Do what you
I,
want to
I
do.
I do feel like I was gonna back, but I need like the backstory to everything
Yeah.
because
Yeah.
that's
Absolutely.
that's really so. Back in 2006, we lived on the coast. My husband and I are like high school sweethearts, really elementary school sweethearts, but we won't get
Oh,
into
no
that full
way.
history. Full history.
What? I didn't
So
know that.
yep. So, but we'll just say high school sweethearts. We got together officially again after high school. But he worked for his dad's excavation company and had a really good salary. I worked whatever, I worked at the gas station. I worked at the physical therapy office. All these little jobs. Did a little college. Really hated it. Dropped out, and got into some photography. But anyway, he bought a house because he had enough income, and he knew that buying a house would just be like pretty baller at
The best.
20 at
Yeah.
20 years old, right? So he's really
Yeah.
good with money. He likes to claim that he's like, is it Scrooge McDuck, the one who like dives into the pile of coins on DuckTales? Like, what who is that?
Yeah. 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 No,
Yeah.
because it's Mr. Scrooge, but it's the DuckTales version. Scrooge McDuck. Yes,
Yes.
exactly.
Okay. So like that's how I owe him. He just wants to pile his coins and just live in that. So he bought a house in 2006. And I, of course, lived with him. We had little dogs. I joined the army. And then we got married. But what happened in 2008? One, we
Oh,
had our
oh,
first
yeah.
child. One, we had our first child. I came back from the army training and all the things. We had our first child, and the 2008 recession hit. And his
Goodness.
dad's company had to fold because they had years of development in that small coastal town lined up,
Oh,
right?
no kidding.
And that developer who was
Wow.
in charge of all of those developments stopped everything overnight. So while there were some jobs that
Yeah.
came and went, it was not enough to sustain the business, unfortunately. And what happened was my
Yeah.
husband had to go on unemployment. It was really hard on him mentally. We couldn't, throughout that period of time, I forget the years and the time because it seemed like forever, but it also seemed so fast. Um, we had another child. So that happened. And I was working because he could not get a certain type of job that really like paid for daycare for our 2 kids and all the things. I was commuting an hour and a half into the city in here to Salem to work for the National Guard full time. And so we decided when I got that job, we'll just put the house for sale, right? And we put it for a great price.
Wow.
It didn't sell. It's the price. 3 years it sat on the market without a single offer. And at that point, right? Yeah, it was crazy. At that point, we just finally everyone's mental health was just like imploding, and I was tired of driving. I didn't get to see my kids very much. He was just like, I need to be like worth something. And so we decided
Right.
to give the house back to the bank in a process called a deed in lieu of foreclosure. So it didn't hit his credit as hard as a foreclosure, but he couldn't be on another mortgage for like I forget what the time period, like how long, at that time. I
No
want to
way.
Yeah,
Okay.
I want to say it was like 3 years. He wouldn't be able to be on another mortgage. But by that time, I also qualified for a VA loan. So when we gave that
Mm.
house back to the bank, which was only in his name, I now then was able to use a VA loan, which I still had no education on, um, to get a house for us out here in Salem. So now we're going to skip forward, right? Because we sold that house and then we moved to a little farmhouse. And that farmhouse was exactly what we needed. And this was another thing that people um they don't know like how much they can do with the VA loan or what qualifies for a VA loan. We bought a really shoddy farmhouse with a VA loan. We just knew
With
we
your
had to
VA
fix it
loan.
with our VA
Okay.
loan. It was a wild process. And the VA appraiser came out and was just like, there's a precious 1927 barn on it. And it was just absolutely adorable. But it was covered in patina, which is like the aging of the boards and all of the things. And he just came out and said, uh, you're gonna have to paint the barn or you're gonna knock it down. And I was like, knock it down. Okay, no, and it was
Mhm.
like all of these things. Like he had to hit these requirements for us to be able to use the VA loan, but we busted our buns because we were doing for sale by owner. The seller needed to get out of the home pre foreclosure status, so we did for sale by owner, and we busted
Uh-huh.
our buns over like a month to get that house. Then fast forward again, we were in
Wow.
that place for 5 years. And this is where the change really started to snowball because we were only in that property for 5 years, but we sold it for sale by owner as well. And we gained almost $200,000 in equity on that farm property. Sold it cash money to
Whoa.
a California buyer who, by the way, was our neighbor's brother. So it was a really incredible deal, but it really set us up to buy that first house here in the fabulous Pringle Creek community in Salem, Oregon, which unknown to us what that would start. So we bought the house here we're going to call it 2047 because that's um, the numbers for it. But 2047, we bought it for 434 at 2.7 interest rate. Our mortgage is like $1,900 a month on that house because we did put money
For
down.
a
We
half
paid.
million dollar house.
Uh-huh.
Yeah.
Yep. We paid off my vehicle at the time so that I wouldn't have like a car payment as well. We were able to put like $80,000 down on the house, even because we did actually buy that one with a conventional loan. And that's the other thing is depending on what the products are doing, the interest rates will vary. And at the time, the interest rate for a conventional loan was better than the VA loan. So my husband used a conventional loan for that. But I sold the farmhouse, which was in my name, and then
Mm-hmm.
he bought 2047 in his name only. And some people always ask us, well, why do you do that? And I'm like, I don't have a really good answer for that. But it has really worked out for us strategically with like DTI and who has the ability to do what with their credit. And so his name only is on 2047. But we had the little apartment
Got
ADU
it.
in the back. And this is where it starts, right? So my college nephew lived in that apartment for almost a year. And then he decided he wanted to move in with some friends and do some co-living with some friends in another apartment, which left that space open. And I was like, well, what the heck am I going to do with this? Right? No landlord experience, no nothing. And I did find out through our city that we could not do short term rentals, but I did want to retain some ability to use that space. It's a beautiful little space. And for like if we had family over or just whatever, but we couldn't do short term rentals because of the city. So what I stumbled upon was what is now our rental strategy, which is midterm rentals, where we rent month to month to traveling professionals or people relocating. And it's the happy medium. It's I don't have to flip over the unit every 3 to 5 days and deal with that chaos or people who are just in luxury vacation mode. And I also don't have to give up, the control because I'm a bit of a control freak, the control of my space for a long-term tenant, right? So we
I
have
see.
people who are in there. Yeah. And so we get fabulous rent. So what happened then, and here's where that story starts to compound, is we made it known. We created this plan once we decided we were going to rent that space out, and like we had a small aha moment. And the aha moment was like, listen, if we just take the income that we get from that apartment, which we don't even need, and we just roll it into paying off our mortgage faster, we could literally pay our entire mortgage off in 7 years. Probably faster, but I don't remember what we were calculating at the time. I know 7 years was the thing. Well, we had another community member who was like a mentor to us, him and his wife. And I'll give Dean Chu a shout out on here and his wife Wilma. They're fabulous. But Dean has been in real estate his entire life. He was born and inherited, partially inherited his family's real estate from the San Francisco area, right? The
Okay.
San Francisco area. So he is long-term investor. He's been a private banker. He's been in the banking industry, all of the things. And so what we wanted to do was have a dinner with Wilma and Dean and say, this is our grand plan, and kind of just get a good job. You guys are doing the right thing, right? And so we have this dinner with Wilma and Dean, and we're like, and then we're going to pay off our mortgage in 7 years. And he just goes, why would you do that? And I was like, well, so we don't have a mortgage payment, like why would we not want to why would we not want to decrease? He's like, yeah, but if you pay off your mortgage, then you don't have the ability to lend from it. You're your own bank right now. That money is yours. And I was just like, I don't know what you are talking about. And it didn't make sense to me until like the end of the dinner. And by the time we left that dinner, my husband, the visions of his pile of coins, right, was just in like a whole different space. And so
Pile of
I'm the
houses now.
pile of houses. So we had told Wilma and Dean at that dinner that we were like, well, maybe in like the next 2 to 5 years, we'd like to maybe buy a second home, right? So that we have the ability, flexibility when our kids start getting out of the house.
Yeah.
And well, unknown to us, they were great friends with the lady who owned this house. And they basically like bartered this deal and made this connection behind the scenes. So one day, the owner of this home walked up to me just walking down the sidewalk and said, I was wondering if you and Brandon wanted to buy my house. And that was just like,
Wow.
it was just, it was just that. And
I
I had no idea how to
I need
do
to
that.
can I pause you there
Yeah.
and we'll start right where you just stopped, but I need to
Yeah.
like backtrack on a
I know it's a
couple of
lot.
these things. Okay. No, it's good. It's good. So let's go over something. So the ADU situation. So this is like a
Hmm.
classic what two-car garage, and instead of an attic, there's a second floor, and it's basically a studio apartment, fully ready to rock and roll, fully livable, mini kitchen, all the stuff, right?
It's better than that. It is a full one bedroom apartment with a full kitchen.
Oh, okay. So full kitchen. They got a wall
Yep.
separating the whole situation. Okay, perfect.
Yep.
So awesome. Those are actually super popular here in St. Pete, Florida, where I'm at. They're all
Okay.
over the place, and even all
Yep.
the new builds are getting built that way. So
Yep.
I really, anyways, I bought our house here in 2022 in the summer. So that was the worst time in the history of the United States to try to get a deal anywhere, especially in the St. Pete market. Like things were going. So it was, I was not, I just needed to buy a house because I just had my
Hmm.
Ukrainian family flee the war. So I was like, I don't have,
Right.
I'd love to get an awesome house hack and a deal, but like I had bigger fishes to fry at the time.
Yeah.
But now I'm like looking at all these houses in the neighborhood because St. Pete is like just evolving and everything's getting new and beautified and all the houses are getting renovated. And I'm like, there's so many of these, so
Hmm.
many detached garages like 20 feet from the house, 20
Hmm.
and boom, and they got little steps going up there. Anyway, so that's really cool, guys. So that's a what does the ADU stand for? Something like auxiliary something dwelling unit. Anyway,
Some people say auxiliary, some people say additional, some people say accessory dwelling unit.
okay, yeah. So
All right.
basically, a separate apartment that I
Yes.
mean, it's kind of like having a duplex, and that can a lot of times offset the majority of your mortgage. So there's how house hacking 101. Second thing was the farmhouse. I wanted to kind of
Hmm.
how in the world did in how do I say this right? Like you I guess you typically don't hear of a farmhouse appreciating that much, right? Like what did you guys do to force that? Like what is there something you did specifically, or was it just luck of the draw all of a sudden? Like, I know you guys put a lot of work into it, but like what made it, like what was the original price? Like $200,000, was that like,
We bought it for
30%, 40%
265.
increase?
Yeah, we bought it for
So you almost
265.
doubled the value. You almost
Mhm.
doubled the like. Okay, there's
And
got to
we
be
didn't
something you did
actually
to it.
do any, no, the pandemic happened, and everybody, I
Ah,
think everybody was wanting to get out and just have space, but also California is always on fire. And a lot of Californians are always looking for, I mean, they can buy those properties cash, from the equity that they have
yeah,
or the insurance money that they get when a home burns down. So it was a little
right.
bit of luck, I would say. We literally, I was trying to think, we did some improvements where like we turned one of the bedrooms into like a theater room with a projector screen and a nice setup, and we converted the upstairs, which was just kind of like a really small kid playroom, but then we blew out two walls which actually had a wing over each side of the house, and then my husband built basically our two older kids bedrooms up there. So we did a little bit,
So that
and
probably forced some. I mean, I could
it
see
did
that
force some
forcing some
appreciation. Yeah.
appreciation.
We put in
Yeah,
all new
yeah.
carpet. It wasn't anything major. Like I would say we did not put, I mean, we're not going to count how much I put into like animals and all the expenses I had when I was farming on the property, which is why
No,
my
no,
husband, my
just
husband's
the real
pile of
estate.
coins. Yeah, my husband's pile of coins were diminishing because I had pigs and
Well,
ducks and
yeah,
things.
but that was probably part of the
The appeal.
the marketing and
Hmm.
the appeal of
Yeah.
the thing, right? Okay.
Yeah.
If somebody was
Yeah.
looking for that, that probably spoke to them, right? Like they
Yep.
didn't want to
Yep.
like get into a bidding war with anybody. They're like, here's our top dollar. Like, okay,
Yeah.
all right.
Yeah. So we did a
And
little little
some
stuff to it.
okay. Now you mentioned a technical term, and obviously, Betty, like our members are anything from somebody just starting out, or
Hmm.
they're maybe still scared of debt, right?
Yep.
And then there's those that are like the real estate moguls that are I don't know on their 20th house. Uh, when you said DTI, that
Hmm.
sounded like it was a pretty important part of your strategy. Guys, so DTI just stands for debt to income ratio. It's basically how
Hmm.
the bank decides whether you're going to put yourself in jeopardy or not uh, on this acquisition. When you buy a house, like, are you going to be in trouble? Are you going to be able to make payments? So what they look is like, what
Right.
are your fixed costs in life? Those are your expenses or your debts that you have to pay every single month. And then what is your income? And they don't want, obviously, your expenses to be more than your income. And oftentimes they set a limit. They're like, we don't want it to be more than 50% or 60% or whatever. And so uh, and I just wanted to parlay that with another thing you said. It's just I think this is a good educational moment. Is you were saying that there's lender overlays, guys. Not every
Hmm.
VA loan is created equal,
Right.
because it's not that the VA loan or the VA cares. It's that these lenders, when they decide to do their lending operation, right? They're basically just brokering. They're just selling a product from the government to you. Okay, they're
Correct.
just the in between person. So they take on a certain amount of risk if they don't pick the right people to do that with, right? And so different companies, like, I don't know, we all know the big names, like USA, Veterans United. Then there's small
Hmm.
brokerage shops, or there's individual like lone wolf brokers doing their thing. They hang their hat somewhere with some company. Then you know, they have their own set of guidelines and rules, right? And so they do need to check DTI, even though
Hmm.
there's no real hard and fast rule behind that. But I think, can you explain how that's like, what do you mean when you said DTI? Why was it something that you said that the conventional loan helped your DTI? I think I know what you're getting at. Can you explain to the listeners what you meant by that?
You're right. So, I don't know that the conventional loan helped our DTI, but it had a better rate at the time. But what I will say
Ah,
about when my husband, and this is something that I really love letting people know, because some people are kind of pull keeping themselves out of the investor market because they think that they aren't up for it, right? That they aren't the right type of person, or maybe they've had some mistakes in the past. When we left the farm during the pandemic, I was a wedding photographer. That wasn't going well for me at that time. So there
during
was
the
a lot
pandemic?
during the pandemic. I mean, it was just cancel, 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 right?
Oh
And
my
so
gosh, I can
I,
imagine. Yeah.
yeah, the financial window for me and being able to keep up with my bills, right, really hit a wall. So when we went to sell that house, my credit was not in a good place. Like I want to say mine was probably, I mean, it was probably in the high fives at the time, but it went down from like seven something. And I was like, we've got to sell the house. We've got to do something. Right. And my husband, kind of forced my hand because I still COVID scarcity mindset. I didn't want to leave. Like it was like my security blanket. And so we were able to
Right.
move, but we made the decision that he would be the only one to apply on that loan because with my credit score added to it, it would have raised the interest rate, right? So that was a
Okay.
strategic move that
Okay.
time until my credit could like recover, sell the house, get everything cut up, paid off, all of the things. But, you know, you can do that as well, right? Like you don't both always have to be on the loan. You can be on the title and on the deed, but you don't have to be on the loan. So
I
making sure
think
that
that's an
you're,
important point.
yeah.
Yeah. I think that's a really important, like, it's same thing with taxes. You can
Hmm.
do married filing jointly. You can file separately. Like you guys, family unit, you guys be one team, one fight. However, you might want to strategically approach every deal differently. Um,
Right.
so to me, the DTI, like what I initially thought was that because you did the 20% down payment or whatever it was, right? You
Hmm.
had a down payment that lowered what that loan amount was because you paid for part of it out of pocket. And
And it
so
did.
that
Yeah.
decreased your loan payments. Plus, you're
Correct.
saying that conventional loan had a lower interest rate, so that lowered the payments even more. And so when the bank for future deals, not only this
Right.
one, they would use, the debt you owe on that house plus the
Correct.
income of that house, like
Hmm.
it would have helped that ratio, the debt to income ratio, better so that you could, because guys, it's not only about this deal. Although I will say, like when you're building your confidence, just kind of put your blinders on, get the deal done. But
Yeah.
you eventually you want to start thinking strategically, second home after that, third home, fourth home, and you want your acquisition strategy to set
Hmm.
you up for not just this purchase, but the 10th purchase down the road. And this
Right.
is DTI is just one of those things that are important because, yeah, I mean, we can buy up to what 10 houses with these loans, conventional loans, if we decide to do that.
Conventional. Yeah. Yeah.
Um,
Typically your Fannie Freddie conventional loans. Yeah.
yeah, it's something you guys can have up to 10 of those in your name, which is it's a limit, but like if you hit that limit, that's like a good thing. Like you're doing something
You hit
right.
that limit, but if you hit that limit, there's also creative ways around that limit. So we'll just leave that one there, though. I'm not going into that.
Yeah, yeah. It's like by the time you get that many reps, like your
Hmm.
field of view, and because
Hmm.
first of all, your lens through which you're looking at life with is very different. You're like finding those opportunities way faster and better than anybody else. But also your field of view is expanding, and you're like you can pull strategy and be like, ooh, maybe I can acquire this one seller finance, or maybe that person can like deed it over to me, or like the title, like we'll do a subject to deal. Or like guys, if I'm speaking French, I'm sorry. I'm just saying my point is
Yeah.
you're starting off small, like Betty and Brandon. You could almost look at it as like their first deal was maybe not super successful. I'm looking at it as like, no, that was their training grounds. Like that was their
Hmm.
seminar. They went, I was just listening to a comedian. Actually, I probably mentioned this the other day, Betty, where he was like, I am only ever going to get on stage as a stand-up comedian 1,000 times in my lifetime if I'm lucky. So he's like, and I know that I'm not going to get good at being on stage until after like rep 200. So he's like,
Yeah.
my job is just to burn through and just get those 200 out of the way so I can get to where I'm good at stuff. So you
Yeah.
guys had a seminar, you had a lesson learned, and now look at you guys, right? Like
Yeah.
you got two homes with the ADUs on a single street. Those are like your what do you call it? Like the cornerstones of your portfolio, would you say?
Yeah, yeah. I mean, but we're also building another one right now with another ADU.
Right.
But what going back to when we bought this second house, right, in which she walked up to and asked if we wanted to buy her house, we did not know how to do that because we didn't have leftover money from the sale of the other house. We weren't expecting to buy another house right now. And so
Right.
this is when I stumbled upon ADPI, right?
Oh,
Somebody along the way was like, get in this group. Somebody in there will have the answer. So I did because I was on an absolute mission and time was of the essence, right? Before she decided to just like list the house. And so I hopped into ADPI and I was just like, well, we want to buy the second house, but like, I don't think we can because it would be an investment property and blah, 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 blah. And somebody was just like, just move into it as your new primary residence and make the other house a rental. And I was like, Yes. Wait. I mean, it was just like the silliest, again, going back to like all the horror stories I feel like I've heard
Right.
or bad information people have told me. There was just like a moment of clarity. And so I was just
Hmm.
like, that actually works. And then of course with our mortgage broker, we had to create the reason as to why we're moving 4 doors down, which we did, and that all went well, right? But
So who
that's
pushed you
when
into that? Like who gave you that little? I mean, it sounds like we talked about it earlier, and you kind of just
Mhm.
like, inadvertently, like you're saying like you guys wrote it up, but like who told you to do that? Like I'm curious in those little light bulb moments, like what was the thing that you were like, oh, we just do this, Did
like
somebody tell you that?
to buy the second house or to use the VA loan.
No, no, no. To write up what you had to the underwriter that worked for the lender that was going to submit that to the VA to get this approved, right?
Sure. So the I can't we don't get to you don't really get to talk or communicate at all with the underwriters, but our broker
Right.
was military, former
Yeah.
military, and he also was an investor, right? And so he said, I can't tell you exactly what to say, but I want you to think outside of the box as to why you are moving to this other house, and then I just have to have you put it in writing. So we just went kind of like through the why are we moving down there, or
Okay.
like if
Okay.
we're moving down there, what is a reasonable
What are the
reason, right?
benefits?
Right.
Right,
What
right.
how
Okay,
does this
so
property
your
benefit
broker.
us? Yep.
Right. So and when you're saying broker, guys, I said lender, but basically it's a loan officer, right?
Hmm.
Right. So this is somebody who they might not work for a big bank or something, but they basically they broker out loans to where
Hmm.
is best for you, right? They shop it
Correct.
out for you, kind of like an insurance broker. So this loan broker, he sounds like he knew exactly what was up, and he
Hmm.
guided you guys in the perfect way for you at that time. Like
Yeah.
it really worked out. Okay,
It was exactly
fantastic.
what
That's
we
that's
needed.
what I was
And it
curious.
was
Yeah,
like the holding of the hand, because you really do feel like you're doing something wrong. And like the longer that I'm in this position and the more people that I talk to all the time, it's like you need to give people permission. It's okay. These things are okay. Let's get
that.
clear about what the actual guidelines are as opposed to the bad information that's out there. Right, because it really is okay. There's no fraud happening, and
Yeah.
this is a tool for us as military veterans and service members. Um, and it really does have enormous benefit to it.
Let's double down on that because I was actually
Hmm.
just talking last night with a bunch of West Point cadets. Okay, it was really
Yeah.
cool. Remember Daniel Coletti in our group?
Buddy, yeah.
He
Yeah.
he's yeah, yeah. So he works at from my understanding at West Point. He's like part of helping this whole finance club there uh learn about finances outside of the bubble that is like
Hmm.
a service academy. And I'm a Naval Academy grad, so I got to like make some jokes with them and whatever. But I jump in, and that was one of the messages I had for them, similar to what you're
Hmm.
saying. I was like, I was trying to give them permission.
Hmm.
Here they are, seniors looking towards their first duty station, their training, and all they have on their mind is the military. Which, yes, like I applaud that. That's 100%. The agenda, the mission, the whole point. However, I wanted to give them permission with something I was struggling. I was like, am I okay to think about money outside of the military pay chart? Like, is that
Hmm.
okay? I felt very guilty so many times thinking outside the box. Am I like, I don't know. It wasn't so drastic. I was like, I'm not serving my country because I'm thinking about money. But I was like, is this, because the military creates this agenda that like, we're taking care of you. Shut up and color, just do what you got to do kind of thing. I mean,
Yeah.
most of the times more politely than that, but that's kind of the, at least in the Marine Corps, I was getting that vibe like, hey, and so, and so when you're saying permission, it's also with the same thing with disability, like I
Yes.
think a lot of
Oh,
people,
yes.
right? You just went through this too. Like I know so many people. Maybe the Marine Corps is just very drastic with this. I don't know how the other branches are, but people a lot of times didn't even want to hear anything about disability because, like, A, I don't want that on my record. B, I
Yeah.
don't want to be a pansy.
Yeah.
C, I don't deserve that. D, I already have a great paycheck. Why do I want to steal more money from the government? I'm like, dude, where are you? Where is all this coming from? So there's a part of this, our benefits. Here's what I think the VA loan and VA disability is. I think it's part of our compensation package, but we don't think of it that way. You have
And
like
we're
you
not
have
told that it
permission.
is. Yeah, you do have
Yeah, yeah.
permission. And I've been out of the service now for 8 years. And I did not know until my first ADPI con. And like again, like this was like the snowball. Once I found ADPI, everything just happened so fast. It happened so fast. I got so much clarity, so many doors opened because I had that person or those people in campus, holding my hand, and I could ask questions all the time and get the right answers. And I there was nothing stopping me at that point from achieving what I wanted to achieve. But when I went to my first ADPI con, I saw what's his name, the owner of VA Claims Insider.
Oh, Brian Reese. Yeah.
Yes, Brian Reese. And I had this like shock come over my body, like when he was up there talking about the different things that qualified for VA disability, which I had zero idea. Here
I
I
know, right?
was. I was a 42 Alpha 27 Delta, public affairs. I was a little bit of a mutt in the military, but
Same.
here I thought like nothing would have qualified me for a VA disability. And right now, I'm sitting at 70% waiting for my next bump, which is at step 5 right now, making my eye twitch. But it blows my mind. And while people don't typically like to talk about their VA disability, I got really emotional because my dad was a Vietnam vet who was EOD in the Navy, and he was messed up. And he fought his entire life to
Yeah.
try to get a VA disability, and he was always denied. And it breaks my heart because here I feel like I just walked in and got handed it because I had the right people. I had the right people showing me how to do it. And it really does matter. And so I
Yeah.
still like get, a little emotional about that because he was truly, truly messed up. And I think about just the difference that could have made for him, but also for myself and my sisters growing up. So I do want to encourage everybody who's listening to this. If you don't know, if reach out to the people who are the experts in those fields and just ask honest, authentic questions. Stop hiding behind a sheet, and just get
Yeah.
comfortable and asking those questions.
You know, I know that this isn't um we're not focusing on disability, but let me just add
Yeah,
one more thing on that because I think that's very powerful and I think I mean we are about impacting the military
we are.
positively financially. So like I do think it's important to touch on. You know, I when I was doing this stuff, I forget who told me this, okay, but I remember
Mhm,
something stood out. They were like, "Hey, imagine two parallel universes.
mhm,
One where you joined the military and it affected you the way it did.
mhm,
By the way, guys, it doesn't mean that like I don't have PTSD, right? But I
mhm,
do have other like it could be little things. Like for example, I had to get a titanium rod removed out of my leg that because the pain got exacerbated by whatever a pin inside my
mhm.
leg after all the hiking I did at TBS as an example. What if I didn't have those pains in my knee and it would be more pleasurable for me or just more fun for me to play with my boys, right? Who's going to put a dollar amount on me being able to enjoy having fun with my kids?
Right,
Right. Like, or maybe I'm able to have fun with them, but it's at like the 80% of but it could have been 100%. Who's to say what that is worth to me? Right. And when
right.
I started realizing like, what is the parallel universe? Like, what if you did go to the military? What if you didn't? If you think in your head, like, okay, my life is a little bit different probably because of the military, because this little thing, that little thing, it adds up. That is a part of your compensation package.
Right.
Uh, like everything is set up to compensate you for the changes from you serving your country versus not.
Mhm.
It's not like otherwise our paychecks would have been higher. I'm just being very honest. It's math. But they
Right,
decided, no, well, we're going to compensate you this way. The end. And the VA loan. That's how it
right.
works.
And I think honestly, the true, um, people won't look into it. People will assume that they don't qualify. That's a way that they don't have to pay that higher income because there will be people who doubt and people who don't want to have a title or a stigma or whatever it is, and they are cashing in on I think that right. I
Yeah.
don't want to go too much into that, but I
Yeah.
feel like that's just a part of it. Like you said, it's like a part of our compensation, but they know a lot of people are not going to take advantage of it.
And it's almost like a legal system. Like there's black and white rules, thousands of
Yep.
pages or whatever, and obviously when there's millions of veterans and there's this massive rule book. On the flip side, it's hard to train somebody to truly adjudicate it perfectly. So what they do is
Right.
they just say, here's the black and white rules. And so we, as those that are applying and petitioning to have it, we have to be our own like advocate. We have to be our own attorney essentially.
Right.
So that's a lot of times why like VA Claims Insider exists, and there's attorneys out there because they're
Hmm.
experts. They're like, they help you go to bat for yourself. So
I do.
if you're in the mindset of like, hey, maybe I don't deserve this, it's going to feel even worse and ickier if you're like fighting
Hmm.
for it. But that's
Yeah.
why I think what Betty's saying is, guys, you have permission. Okay, like you can do this, you should do this. And I think I want to get us back
Yeah.
on the month to
I
month
can.
stuff,
Yeah.
if you don't mind, because I think that is a huge part of your strategy, and I think that might really light a fire or have a light bulb moment for a lot of our members. So let's go through the pros and cons. Typically, when people think of renting out, they're like, okay, find a property manager to list it, get it rented, or you do it on your own and you use some amazing software like Turbo Tenant. Which, by the way, if you guys go to activedutypassiveincome.com/turbo tenant, it's an amazing piece of software
Hmm.
that you can literally get leases done, find tenants, manage your property with the help of AI, all mobile from your phone while you're on deployment. It's wild. But anyway,
You.
um, yeah.
I
So what I
was
was
gonna
gonna
say
say is
I do.
like,
I do
what's
use
that?
Turbo. I do use Turbo Tenant, and I did legit sign my last lease last week while I was in the Taco Bell drive-through line. Like
There
it
you
was that
go.
easy. Yeah.
It, so, but it's that long-term rental
Yeah.
that a lot of us think about. And then all the
Yeah.
hype right now is short-term, but you're finding essentially this sweet spot where because it's probably over 30 days, it's
Hmm.
okay with the local
City.
laws or HOA or city or
Correct.
whatever, right? Like it's
Yep.
okay with them because it's over 30 days. So it's not like this constant coming and going that, maybe that's what they assume will annoy the neighborhood or neighbors or whatever the rules are. Okay. So you got that. And it gives you the control because you get to spot check,
Hmm.
more often than just every 6 months or a year. And they're paying you more, right,
Yes.
than than
Yes.
than a long-term rental would. As Brandon Turner said at our last conference, it's no, especially in today's market, it's no longer will it cash flow, it's
Hmm.
how do you
So
make it cash flow,
that's
right?
that's that is like my passion right there. Is like monetize everything, right? Like where I'm constantly, and I use AI too to just help me brainstorm and expand my mind further. I always want to figure out different ways to monetize and or increase my cash flow, because the great thing is right now my mortgages are the highest they are ever going to be. And it's only going to get better. But I was just doing the math before I came on today. And when we move out of this house and into our next house, our overall true cash flow after mortgage, property insurance, taxes, HOAs, because we have to, ours are furnished places, so we have to pay utilities, all of that stuff. We will still be cash flowing between $800 to $8,500 a month. And when we join ADPI, our
Shut the
MF,
front door.
I know, and our MFFN, or our military financial freedom number that we went through, like when I joined campus and I was like, okay, let's do this calculation. And I'm so glad that we have that exercise. Our goal was to get to 7,200 in the next 10 years when my husband retires so that we could
Oh
replace
my
his income.
gosh.
So we're
So you
already
hit it.
past that. So we're already past it, which is insane, right? So, but it
I
is the
didn't know that.
midterm.
It was like last year. It's like
Yeah.
last year you were pumped about it hitting 3,000. I was like, oh my
Yeah.
gosh, that's how much my 56 unit makes me, or like a little bit more. But I was like, wow. Okay. And
Yeah.
now you're like, whoa.
It's the
Guys, I
power. It's
mean,
the power of the ADU. We do self manage. I do use Turbo Tenant, but it's great because we're all in a half mile radius, so it's easy for me to self manage. And then this next year, we will start to, I'm going to outsource things like landscaping, right? I've landscaped our
Right,
spaces
right.
very nicely. It's a part of my brand for my spaces. And so it's important to my brand and the price that I charge. But our 400 square foot one bedroom apartments rent for $2,100 a month. And that's not even like that's almost pure cash flow, except for the utilities that come out like $200 a month out of those ADUs.
That's epic.
Hmm.
Wow. Okay. And who do you think, gosh, when it comes to the ADUs, is there
Hmm.
like something that you want to like, what is the biggest gotcha moment that like you, or something that you had to learn the hard way that if somebody's like, wow, I really love Betty's story, I think I'm going to look for ADUs. What's your like word of advice? Make sure this happens or make sure that happens. You know what I mean?
Yeah, well, not every ADU is the same. And so
Okay.
when I'm looking at ours, and the reason I've stayed in the half-mile radius that we have is because it's the more desirable, let's just call it, your A class neighborhood, maybe low A class neighborhood. It's certainly not the highest class neighborhood in Salem, but it is in a great neighborhood, a
Nice.
great
Yeah.
section of time. And that is what I've made a part of my brand. So you could certainly do ADUs for less. They're going to cost you less to buy, and you can rent them for less and still cash flow well. But I would say really dig into what you want, what numbers you're trying to hit, and then work backwards from there. That's how I have done it. I have said I know exactly what the MFFN, right? But I was, instead of being like that means I need 15 doors, I was like, how few doors could I do this with actually? Um, so that's when the midterm rental strategy really, I just lit a fire. I dove into all the content. I researched everything, and then I decided, I want mine to be the high end midterm rental. I want a certain type of tenant in there that is mutually going to respect my space and treat it well, but
Right.
also get a lot of enjoyment out of it because people will pay for that. And I know that I'm one of those people. I will pay for different comforts. And so getting really clear on the avatar of a tenant that you want and or are willing to get, and then just putting some brain bites into strategizing. How do you find those people? And you find those people by speaking to those people in your
Yeah.
listing, and yeah, all the things.
I just had one of the cadets. He asked me, he's like, "Hey, I'm moving. I forgot what I don't know the army base is, but it's just like north of Austin, Texas, or something, or near Austin,
Hmm.
Texas." And he was saying like, "Hey, moving over there. Like, how do I find like a house hack or like?" And I was like, "Well, pretend you're your ideal client. Like,
Hmm.
what would you be looking for? What is the
Yeah.
neighborhood you want to live in? What do you want, like, in, maybe the landscaping to look like, or the furniture to be set up like, or what, I think Kevin Brenner used to talk about like like he had the avatar, like this persona, this person
Yeah.
in mind. So
Hmm.
with his short-term rental, he literally designed everything for what he imagined a typical family with two kids and a dog. He's
Yeah.
like, I
Yep.
am marketing only to them.
Yeah.
We're gonna have a little dog corner and some
Hmm.
dog toys. We're gonna have one room that's just kids' toys and like and it's painted a certain way. Like every single, so that's why I told him I was like, it's all about the sale. You have to be able to
Yeah.
market and sell this to the right person. So if you just
Yes.
because then everything will happen. Like if you're constantly booked up, everything gets easier. It's like in when I was a pilot, we talked about you can get ahead of the aircraft. You don't feel behind.
Hmm.
You can start thinking strategically, and that's when your wealth really grows. So like just
Yeah.
hit that first one really good and have it sell well, right?
Yeah, and getting there, especially with AI now, I would definitely like, don't just plug, whatever your prompting abilities are for AI will definitely matter. If you're not truly authentic and you aren't educated in that space, that will show, right? But the other part that I want to share is be ready to be a landlord, right? And if you're self-managing, get yourself educated. Turbo Tenant really is incredible because it's like a one-stop shop and they actually list your property for you in a lot of places and a lot of platforms. But then everything from there is just really easy. But you do need to still know what your requirements and obligations as a landlord are ideally before you list that property. I see a lot of people in the community and they'll come into the free Facebook group and say, I just got my first tenant. They're asking me if they can change the toilet seat, or they're asking me something, right? And it's kind of a very silly, well, how would you not, you're not clear, or what's in the lease, and they say, well, I just kind of
Right.
printed one off of Google templates. And I'm like, but do you know what's in the lease? And they haven't even read their own lease, right?
Yeah.
So getting those things lined up ahead of time and educating yourself on them is super important. The lease will make or break you, and understanding it will make or break you. So for mine, which are midterm rentals, I created a lease. And of course, I had my lease and everything before Turbo Tenant. So now I can just upload it into there and then just check it annually with their little checker thing. But what I did was I created our lease with our midterm tenants in mind, of course, and because they do have special
Hmm.
circumstances and sometimes their contracts end, sooner, whatever. And then I took it to a lawyer and I paid that lawyer $250 for about an hour and a half of his time to go over that lease, sit down with us in person, educate us on that lease and the this and the that's of it, right? So now I
Right.
have the knowledge and I have the confidence in that lease as well. I don't need my real estate lawyer for everything, right? And a lot of people are just,
Yeah.
again, it's one of those scarcity minds. They won't even contact them. And I'm like, it's not that much
Or
money.
$250. Like, yeah.
Right. For
Yeah.
$250, I have a lease going forward that I know I can count on.
But what you bought there wasn't necessarily even like but like, you know how I'm like I'm obsessed with confidence, and I'm like, okay,
Yes.
that's what builds the momentum. Like,
Yes.
you sitting down with the attorney, having him or her go line by line explain it to you, your level of confidence probably shot through the roof, which, it's not only the fact that you were then able to confidently and with enthusiasm get your first renter and take care of yourself and make money, but that it's the snowball that happens because of it. That
Yeah.
confidence. I don't know. I had like this pen on my finger for some reason. But like, for those who are watching the video, you're like, what are you doing? But like, I can't, like, I literally see confidence as like this momentum building currency.
It
You
is.
that $250 probably, you know how like people are like, oh, if you put this much into this stock 30 years later,
Hmm.
like that $250 probably will contribute to, I don't know, 6 or 7 figures of your journey if you can,
Right.
30 years down the road from now,
Right.
right?
Right. And it's one of those things too where it's maybe it's because I have a business mindset from my photography business and doing different things. I'm more than willing to front that money and invest in the what is going to be the success of this business, right? Because I understand the importance. It will help alleviate or reduce the number of ouches that we have or real issues that you have. If I found myself for example, when we first moved into this house, we rented the other house to two safety, like, they weren't officers, they were like safety workers for a
Okay.
national construction company that was building a Amazon warehouse, right? Two dudes,
Okay.
super chill. They kept the house immaculate. Never in my wildest dreams did I anticipate the issues or things that were going on inside of the house with a female that would come by from time to time that I wasn't even aware of. But things did happen. Somebody was arrested, not on my property, right, but outside of the property, and Doodle Doo was in jail for about 24 hours. And I found myself going, okay, what does my lease say? Right? Because if this guy is in jail and gets convicted of a pretty serious crime, and the other roommate is there still, right? And my lease spelled out everything exactly. I knew exactly what my rights were. I knew what I should do if he couldn't get out of jail, how to take care of his belongings, right? Legally, his belongings, if he could not come and retrieve them.
Right.
So there's a lot of things that
Wow.
people just won't even think about. The lawyers have seen it all, right? They do know
Yeah.
what should be in
Yeah.
that lease. Yeah.
Oh my gosh. It's funny. I'm going through not with a lease, but with a purchase contract. My lawyer kept hammering me. He's like, read every word, read every
Mhm.
word. Um, and it allowed me to strategize during what's called a retrade, but basically when you're in the
Yes.
inspection period, or you're looking to buy this thing and you realize, oh, this isn't exactly what I thought. I have to change the offer number, or I need some credit back
Mhm.
because there's repairs that we were not expecting. And
Right.
it was like a multiple six-figure retrade. Like I had to change
Right.
because it's almost a $5 million property. And I'm like, guys, this isn't what you advertised.
Right.
And so, but because there's certain steps along the way, right? Like a lot of this is
Hmm.
confidential, but like certain steps along the way, like me understanding the contract, especially during the due
Hmm.
diligence period, like the inspection period, and like the timelines associated with it, me understanding it better than they did allowed me to
Yeah.
actually negotiate in my favor, or actually take
Yeah.
steps in my favor. I mean, there was times they were surprised. They're like, "Oh, wait, that's there." I was like, I mean, both of our attorneys hashed it out. So
Hmm.
like,
Right.
but you are, I mean, it's just like the last episode I was saying the same thing. Like you are your own best advocate. Just like the same reason why I had
Absolutely.
to fire a CPA. You have to
Hmm.
be the master of your own ship, right? You have to
Yep.
understand this stuff. You have to be a student of your craft. I think that's exactly what you're showing, even with a lease, guys. Like I know that might
Even,
be
yeah.
annoying to read through that thing.
The self-managing landlord stuff, you're right. There's a flip of a coin, right? I can either take ownership of it and get confident in what I have so that I can reduce my out. If I were to hire a property manager, because of midterm rentals, because it creates more work, there's more tenant turnover, I would have to pay 20% of what my spaces are renting for to get a property manager. So this is definitely worth it to me to self manage at least a majority. And again, like when you set yourself up with the right systems, it's very easy, right? Like I said, I signed a lease in the Taco Bell drive through, and that person inquired with me like less than 24 hours prior. But I have systems in place and I have information. I can shoot it off really quickly. And then I also just look really professional to them as well, right? They don't have, there's a lot on Furnished Finder and in midterm rentals, in the midterm rental space, if you will, where there's a lot of shady landlords out there too. Like I said, people who don't
Yeah,
get educated before, and then you find yourself as a tenant going, well, what in the world are my protections, right? And so
yeah.
I also look and am super professional and have everything set up, which makes the business run really smoothly as well.
Well, Betty, I think that's a shining example of what our members should strive for. Like when it comes to like the level of attention to detail, being your own best advocate,
Hmm.
being a student of your craft, and also like, holy cow, guys, you don't need 20 rental properties
Hmm.
to hit your military financial freedom number, right?
No.
I think that's a lot of times people like when we start helping people calculate, we're like, okay, well, like, let's be conservative, like $400 a property. They're like, oh my gosh, it's going to take me 20 properties or whatever to hit my financial. Yes, in
Hmm.
today's dollars, first of all. And that's assuming you're not going to get better and sharper at this job. And like once you get your first or second property, that momentum, that confidence starts building, your next one after that might actually be like cash flowing $1,000. Like who
Right.
knows what you're going to be able to accomplish. And I just think that's such a great example. So I'm super pumped that you hit your number. And I'm sure that like now you're all's like you and Brandon have like maybe even bigger visions for what you want to accomplish with this. And you're just moving into this new awesome house and everything. So that's awesome.
Yeah. So what's next? I don't know because there is nothing on my mind except for this house that we're having built right now, and we're
Right.
about
I mean, you're in the
two
middle of a
months.
project.
We're
Yeah.
2 months, but that does bring up another. Let's unlock another wonderful part of the VA. And I know we're running over, but I think this is a super exciting thing that a lot of members don't realize either. Is the VA entitlement, right? again, in the community, I hear people come to me and say, "Oh, I thought the entitlement was $36,000." There is some verbiage about entitlement being $36,000, but that's not the actual math of what your entitlement for the lending actually is, right? So with a VA in 20 something, 2020 maybe, the VA entitlement amount has no cap for most places. Now you're lending, you have to financially qualify, right? But there is
Right.
no real cap to the actual amount of entitlement for your first use VA loan. And yes, you can use the VA loan entitlement more than one time. So, for example, my husband and I are both on the mortgage for this house here. It is the VA loan. We used his entitlement only. Okay. So we used up $465,000 worth of entitlement, but there's no real cap unless you move to your secondary. And then the cap is about 766. So you would take the 766, maybe it's 825 now. Either way, speak to your lender about that detail. Um, you would take that amount and you would reduce it by the 465, and that would be my husband's remaining entitlement. But guess what? I, as a dual military veteran, have my own entitlement. And so for the purchase of the next house, right? I'm glad that we actually have the no cap, because now my full VA loan entitlement can be used for the purchase of that house. But in the event that you both have used up amounts of your entitlement, you can merge together remaining entitlement to then go get another house as well.
So in this case, your full plus his partial could potentially combine and buy a
Correct.
pretty awesome house. And
Correct.
guys, I mean, we're talking like it could be a duplex, a triplex, a fourplex.
Yes.
VA loans are really, really cool. And I know we say that all the time, but that, I mean, it is, in my opinion, okay, it's not like the most immediate best benefit that we have, but long term it is the best benefit the military gives you. Like you can truly build a massive amount of wealth if you play your cards right, if you build on
Absolutely.
the strategies Betty's talking about. How about this, Betty? Can we give everybody like a call to action, where, like, if they're like, holy cow, all of this sounds awesome, we want to move as fast as Betty did, we want to do all this stuff, how can they get in touch with you first and foremost, and where would you recommend? I mean, should we just give them the yeah, how could they get in touch with you? How about that? Let's start with there.
So I want to, and one of the main reasons I wanted to be on here today is I really want to show and demonstrate the ability to level up when you have somebody mentoring you and holding your hand and being available for questions and feeding your education, right? Feeding you the education and making sure that you're accountable to that. And for me, that was joining ADPI campus like 3 years ago, right? It wasn't that information isn't free out there somewhere, right? I can watch content all day long, but if I don't have somebody holding me accountable and then answering my particular question about my own scenario, I'm far less likely and never did take action before, right? So I would recommend joining ADPI campus. There's a free 7-day trial, right? That's a free 7-day trial. Figure it out, right? You get free content, you get free education. We have weekly live events where we have experts come on and like dive deeper into different real estate topics. And then you get to ask your questions live. If you can't make it live, you get to watch replays, right? So you don't miss the content. But what it does is you join that like-minded group of investors who are hungry to take action and hold each other accountable to do so.
And I think that the live calls is
Yeah.
really just like the understated, like it is such a gem, because like in your situation, you didn't have the typical situation. Like you had this ADU concept, you wanted to get a second house in the same street, you wanted to do midterm rentals. Like not everybody's going to have the same strategy, the same situation as you do, but you, and that's why for you, like the clarity came as almost like a light bulb. Like it might seem obvious to one person who's doing this strategy, but it didn't seem obvious to you because you were doing a slightly different strategy. So no matter what your situation is, guys,
Yeah.
like maybe it's not so much content. Maybe you just need to get into a room with another, you know, 10 or 20 of people
Hmm.
just like you and Betty and some of the coaches and some of the more experienced investors just be in a Zoom room and just be like, hey guys, I have this question, and it gets answered real time. And then you get to
Yeah.
post about your wins. And then you get to see other people winning, and maybe other people's strategies give you nuggets and ideas like, oh wait, what if I apply that to my situation? Like
Right.
the kind of the masterminding, as they say, really starts happening when it's like the same type of people on kind of like headed in the same general direction, wanting to acquire more real estate to grow their financial futures. So that's what ADPI Campus is all about. It's kind of call it campus because of like the university vibe. But if you guys are listening to this, go to activedutypassiveincome.com. You will see a big red button
Yep.
somewhere. It'll say sign up somewhere. And
Free.
honestly,
Hmm.
I can't promise we're going to have 7-day free trials forever, but it doesn't matter. It's
Probably
like,
should.
it's cheaper than going out to dinner for two people per month, and you're
Yeah.
going to get an immense amount of value from it. So
Yeah.
absolutely, if you haven't signed up for ADPI Campus yet, go to activedutypassiveincome.com. You'll see Betty in there. You'll see me there. You can
Hmm.
ask us questions. You can ask questions out in the open so that hundreds of people can see your question, can reply, and provide feedback and add value to your life strategy.
Absolutely. Yep.
Yeah. Am I forgetting anything? Is there anything else we want to wrap this up with? Otherwise, I mean, this has been an incredible conversation. I really
Yeah. I
appreciated
mean,
it.
I'm looking forward to if anybody has questions, getting them answered, right? Because I could go on for days, and there's no shortage of picking my brain. So if you're in campus or even on the Facebook page, posting, tagging me, what have you, and getting those questions answered because
Okay.
I get really fired up.
So when this episode comes out, please let me know, Betty, how many people send you a message or an email that says, "Can I pick your brain?" And we'll
Yeah.
see what you get.
Okay. Sounds good.
Okay.
Love it.
Awesome. Well, thanks again so much, Betty. Thank you everybody for tuning in. And as always, do what the cool kids do. Please like, share, subscribe, tell a friend about ADPI, share this podcast. This is one of the main ways that we're impacting 3 million military families in the next 10 years positively in their finances. Having you give your vote of confidence and share our mission and join our mission by doing so would mean the world to us. Again, thanks for listening. Thanks for coming on, Betty. See you,
Yeah.
everybody.
Awesome. Take care.